What's up guys, Daddy with a new video. Today we will be backtesting again. If you didn't see the last backtest video, make sure to check it out. There we were backtesting a simple Bollinger bands strategy. But today we will be looking at a simple moving average strategy. So as we know, time is money, let's get right into it. But first, as usual, the disclaimer: this is not financial advice in any form, and this video is for educational purpose only. Alright, we don't need this anymore. So, maybe to start, what is the simple moving average? The simple moving average is the average of the price of the last X days. So, in this video we will look at the 50-day simple moving average and the 200-day simple moving average. So basically I will now say SMA, which stands for simple moving average. The SMA 50 has the last 50 prices, adds them up and then divides it by X, and you get the average of the last 50 days. I think it's pretty straightforward, but you will see it later in the video. So let's start coding. First of all, we need some imports. I will just copy them in here so it goes faster. We need Y finance for the financial data. We need pandas to work with this data, and matplotlib for visualization. Alright. So first we will get the financial data. This is yf.download, and we will start with the S&P 500 and take the prices from 2018 April. Why do we take this date? I was checking it a bit. I was playing around with the data, and I think this is a good time frame to understand what we are doing. But later in the video we will look at a wider time frame. But that's this part now is only to understand the code first. So let's look at the data frame first. I think most of you know this already. We have the different prices, and maybe we can plot it first. Close. Alright, this is the S&P 500 chart since 2018 April. It looks pretty good if you ask me. Then let's get into the calculations. We will only need the 50-day and 200-day simple moving average. So this will be df SMA 50, and we take the close price for the calculation. So we simply go to the close price, and pandas has this function called rolling, where you just give in the number. So this means it rolls back the last 50 entries and sums them up, and we want the mean of this, and the same for the 200-day moving average. Alright, let's take a look into it. So here we see the none values, but that's pretty normal, because if we start in this row we can't go back 50 or 200 days, and this is why we just have the none value. But here we see that we have the different moving average values. So to get rid of the none values, we just write drop NA, and we see the none values are gone. Alright, and that's basically it with the calculations. So let's take a quick look at the plot. I will just copy this out. Yeah, this is pretty simple. Here we plot the price, we give it a label, we plot the SMA 50 and the SMA 200, also with a label. We plot the labels, and we show the the chart. So here we see in blue we have the price, in orange we have the 50-day moving average, and in green the 200-day moving average. Alright, and when are we buying and when are we selling? I forgot to say that at the beginning. So basically, if the 50-day line or the 50-day average crosses the 200-day moving average to the top, then we will buy, because this is a bullish sign. And if the 50-day moving average crosses it down, then we will sell. So to show you this in the chart, so the orange one is the 50-day moving average. So here we see, I don't know if you can see it, wait, let me just make this a little bit bigger. Figure, fixed size. Let's make it, I think this should be fine. Alright, so here we can see that the orange line is crossing it to the top, so this would be a buy signal. Here we would buy the stock. Then here we see the moving average crosses it down, so this would be a sell signal. Then a few weeks later or months later we see this here again, which would be a buy signal, and here we have a sell signal again. So I think this is pretty straightforward. So let's go on with coding. Now to see the buy and sell signals, or that we can easier calculate with them, we will first create buy and sell, a buy and a sell dates list, and we need another variable, open position, which we will set to false initially. So now we will just iterate over the data frame and look when this cross happens. And every time when this cross happens, we will either write the time step into the buy dates or to the sell dates if it crosses it down. So let's start for I in range. So we go over the whole data frame, and now if we don't have an open position, so if we haven't bought yet, we will look for a buy signal. So what is a buy signal? If the 50-day line, the 50-day moving average crosses the moving average to the top. Exactly, yeah. If the 50-day simple moving average crosses the 200-day moving average, this will be a buy signal. So, and now to get this, to get the entries, we will write in .ilog and I. So we iterate over the range, and then we will look at every row here. And if we have this buy signal, we write this time step into our buy dates list and set the open position to true. So in the next step here, we will look if we don't have if we have an open position. So this is for the buy signal, which looks if we don't have an open position, and if we have an open position, we will look at the sell signal here. And that's pretty much the same. I will just copy this in here, and we will look exactly for the opposite. So if the 50-day moving average crosses the 200-day to the low, so if it's lower. And then we will do the same as here. We will append this time step to the sell dates and set the open position to false again. Alright, that's already it for this buy and sell signals. I will just run this once and we can take a little look what we got. So here we see the first buy date is at around 52 times step 52, which is this one. Then nearly 3 or more than 300. And then at time step 303 we sell it again, or we sell it. This is here. Then 70 days later we will buy it again, and this is the sell signal again. And just for visualization, we can plot it again. So I just take the plot and add a scatter plot with the points. I will not go into detail for the code here. So let's just plot it. So now we see here we have the buy, here we have the sell, here we have the buy again, and here we have the sell again. So now we plotted it on the price. You can also plot it here on the moving average, but I think it's better on the price to see it. All right. So in the next step we will calculate the profit that we would have made, and for this we will simply take the price on the buy dates or on the buy signals and the prices from the sell signals, and with this we will calculate the profit. So how do we do this? First we will take all the buy prices and concatenate them with all the sell prices, so that we get one big data frame with all the data. Let me show it to you. I think this is best. So we will call it df trades, and here we use pandas concat function, and we take df ilogs. So df is all our financial data here, and from this we will take the rows from the buy dates, and here we only want the close price, and we concatenate this with the same, wait, let me just copy this, it's faster, for the sell dates. And lastly we want to concatenate it on the axis 1. So this is how it looks now. So here we have the dates. On the left side are the buying prices, and on the right side we have the selling prices. So let's rename the columns so we don't confuse anything. So the first one is the buy column, and the next one is the sell column. Alright, looks good. So now let's calculate the profit. How do we calculate the profit? We take the sell price. From the sell price we subtract the buy price, and then we divide it by the buy price again, so we get a percentage of our gain or of our loss. So we save it in the profit variable. We take df trades. Now, because we always have this shift in here, we have to use the shift function with -1, which simply takes the sell, which shifts the sell price 1 down, or 1 up, sorry, not 1 down. Alright, so we have the sell price, we subtract the buy price, and we divide it by the buy price. So let me show you how this will look. So we see here in the first trade you would have made -8.4%, so a loss, and on the second trade we would have a 32% gain. So to make it a bit more readable, we can take this times 100. So now we have this in percentage. Alright, so now we have the profit. To get the entire profit for the time frame, we just write in sum. And yeah, there we see it. So in this time frame we would have made 24%, a little bit more than 24%, which is okay, I think. It's 3 years, right? 2018. No, it's 4 years. Yeah, it's 6% per year. It's below the average of buy and hold, so maybe not that great. But to have a better comparison, let's calculate the buy and hold profit. Buy hold profit for this. There we make the same calculation. So we take the close price, but this time we take the close price on the last day that we have in the time frame. So a -1 just -1, sorry. It takes the last entry, and then we subtract the price from the first buy date price. So here I will not take the first price that we have in the data frame. So this would be the first price, but we take the first price when we had the buying signal, just to make it a little bit more fair. So we make this with, so we take the first buy date, and yeah, we take the price from the first buy date. And now we divide all of this we divide it with the buy price and multiply it with 100 again, which gives us a 33%. So for this example and for this time frame, we see that the buy and hold strategy would have been better. Not for a lot, but still around 9%. But this is not very meaningful, so this is why we will take a look at the S&P 500 index and let it check over every single stock in the S&P 500. So I will not code this, I have prepared this here. This is everything that we have written in the coding session, so nothing new here. I just cut out the plots because we don't need them. In the next step, I have a S&P 500 CSV. I downloaded it from the internet, but we just need it for the symbols here. So in this step we take the symbols, so we get the different tickers. We make a data frame for the results with a ticker column, the trade profit and the buy and hold profit, and we set the start date to 2000. Then we will iterate over the tickers and take each ticker, give it to the test strategy function. So the test strategy function is this here, so everything we have done before, and yeah, then we will write it into our result function. I have this in a try and except block because on one stock we had an error, and that's an easy way to fix it. So I will not run this because this takes some time, and we will jump right into the results. So here we see, okay, Apple is pretty extreme. Was pretty extreme for buy and hold, but yeah, as you can see, for most stocks buy and hold would have been better on the first side. Okay, here we have here the trading would have been better, but to check it, here we create a new column. It's a simple boolean, and it tells us if the trade would have been better. So we name it trade better, and if the trade result is larger than the buy and hold result or the buy and hold profit, then we write in true, and if not, we write in false. And so here we have 99 stocks where the trading would have been better, and for 403 stocks the buy and hold would have been better. So we get similar results to the Bollinger Band strategy, and which you should check out if you haven't seen it yet. For this is a very simple trading strategy, probably one of the simplest that is out there, and we have a better result than with the Bollinger Bands. I think, if I recall correctly, with the Bollinger Bands we had even less better trades. So yeah, I think it's pretty interesting to see this result. Yeah, it seems that the buy and hold is the better choice. Sure, if you get the right stocks, then the trading would have been better, but if you just go to probability, I think in this example, for this time frame, for this stocks, it would have been better for the simple buy and hold strategy. So that's it for the with the video for today. I hope you enjoyed it. I hope you could learn something. Let me know in the comments which trading strategy we should backtest next, and see you soon.